Welcome back to the Commercial Property Podcast. And today I'm going to be talking about how you can shape your niche by using all the sources that are available to all of us to just look at things in a different way. And it's really important. When I talk to my board clients, I talk about putting a different pair of spectacles on when you're looking at commercial property. And I think that's the same with any type of investing niche. When you really start to understand it, you look at things differently and you assess them differently, and therefore you see opportunities that other people just don't see. And obviously that comes through knowledge, that comes through familiarity, that comes with daily practice as well. And that reticular activating system in your brain, the one that, if you buy a red car, you will see red cars everywhere, is exactly the same when you're looking at your investing niche, when you're looking at your commercial property niche. So, for example, if you've really done a lot of work and you've started to look at multi-let industrial, let's just say, but for sake of argument, then your brain is going to be looking out for opportunities in that, and you're going to be seeing them everywhere. So today I want to talk to you a little bit about how you can find opportunities in plain sight that other people just won't see. And this is one of those kind of hidden opportunities which are there in the open air, but knowing how to manipulate it and understanding it can give you a competitive edge over other people. So let's get going. So the very first thing I want to talk about is looking at the news, looking at headlines. And I'm not talking about Iran or kind of what's happening in the wider news. What I'm talking about is what's happening with trends, what's happening with the different growth sectors in the economy, the sectors that aren't growing so well, comments on infrastructure improvements, new housing propositions, relaxation of planning policy, stats on online retailing, the local plans, and then kind of looking at local news and what's happening locally and kind of picking through the headlines. Now, we can all see these headlines, we can all understand what's happening, but it takes a bit of your reticular activating system. It takes a bit of skill, a bit of knowledge, and a bit of familiarity to be able to identify opportunities from this. So let me take you through one example. So we have all these best places to live published by the newspapers, the Telegraph, the Sunday Times. They all seem to want to kind of publish their top 100 best places to live in the UK. Now that's interesting in itself, because quite often you see in those lists kind of rising stars that maybe weren't in there a little while ago and are starting to become more trendy, more familiar. So there's certain locations. I live in Gloucestershire. There's certain locations I see in there. I track these kind of league tables and these kind of top 10, top 100 tables. And over time, you see new places being introduced. You can see that perhaps certain areas are becoming too expensive and some of that spend is moving out to other places. And so you start to see trends over time. So look at this stuff, not from a kind of like, oh, that's nice, maybe I'll move there kind of point of view, but from okay, what does that tell me about the commercial property? So, for example, one such location I was looking at had basically reached the top 10 or the top 5 of the top 100 best places to live in the UK. So in itself, yeah, interesting, like probably worth having that on the radar. But then also, because my reticular activating system was definitely energized by this and definitely looking out for it, what I then noticed was that there was a couple of really brand new restaurants that opened in this particular location, and being reviewed by some of the top restaurant critics and having absolutely rave reviews. And then there was a couple of retailers that they were, small brand, mom and pop type retailers that were really standing out and had been reviewed. And then you start seeing a bit of a trend happening. So this is starting to become quite a cool place to live. This is definitely kind of getting on people's radar. Then you start looking at, for this particular location, it obviously won't be the same everywhere. There's actually celebs starting to move into this particular investing location. And, whereas they were moving just up the road a while ago, now this is now the new trendy place to live. So suddenly we're starting to get a picture. And this is about piecing together different pieces of information. We're starting to get a picture of a kind of a rising location, starting to become more trendy, more fashionable. Good eateries are moving in. Because of that, it's starting to become more attractive to probably higher net worth individuals. And so then it's definitely worthy of a visit. So if we go and visit, and then obviously once you visit a location, your reticular activating system really goes on overdrive, because already you're looking out for these opportunities. So what we're then looking at is, regeneration. We're looking for brand new openings. We're looking for moving outside town, looking at maybe some of the industrial estates. We're looking at regenerated mills. We're looking at, as I say, brand new eateries. We're looking at new housing going in, maybe improved infrastructure, whatever that might be. And so that's exactly what I did. I took the family for a day out because, you got to make this stuff fun, and went to have a look at it. And sure enough, after I'd only been there probably 3 years before, but the whole place had changed. Now, it doesn't mean that you have to go and invest there, but it starts to mean that you're starting to understand some of the trends in that location. And obviously, once you start looking at this stuff, you can start layering on, maybe look at the local plan, subscribing to the local newspaper. And local newspapers are really interesting. So obviously you get a lot of inane stuff in there, kind of very small town type news gossip. But also you can get some really interesting headlines about new businesses coming in, new jobs being created, maybe new housing, what the local authority's up to. So don't disregard your local rag or the local rag of the place that you're investing in, because sometimes there can be some really, really interesting stuff in there. So definitely look out for that, and definitely kind of subscribe to it. And you can get this stuff online now.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
And so this is about kind of building a picture. A bit like if you're at university and you're building a research piece, this is exactly the same kind of thing. And we do this because we're always looking for the edge in commercial property. We're always looking for the trends that differentiate one location from another, one type of property from another. And some of this intel that you get almost without realizing it, if that reticular activating system in your brain is switched on and you're looking out for it, then you can find some incredible information at your fingertips without really having to go into specialist property press or, kind of really dive deep into, speaking to commercial agents or anything. Obviously, that's the next stage, is that if you think that an investing location does have some legs, then you want to be then kind of doing some viewing, speaking to local agents, really understanding it. But you can get a lot of this stuff for free if you know what to look for. So, deep dives into certain locations by looking at the headlines, joining the dots, looking at the trends, reading the headlines, and then kind of looking at the local newspapers, visiting the locations, really important, really underestimated in terms of actually looking and getting a feel of a place, how different that can be. I think we all slightly, and I'm very guilty of this, we become with all the prop tech we've got at our fingertips, all the portals, all the websites, I think we're in danger of becoming desktop warriors and actually just getting out in the car, getting on your bike or walking or whatever you want to do and getting out and looking at commercial property. There's just nothing like it. You definitely can get a feel for locations, where works in a town, where doesn't, the types of property that are winning, types of property that are losing. You can look at the number of letting boards, and obviously you can go and look at real estate as well. So really, really important. And of course, you can use national press, local press to join the dots in terms of trends. I spend a lot of time doing this, and I did this recently with the Sunday Times top, I think it was top 100 tech companies. Now, on the face of it, that's interesting. I'm not in tech, so why am I interested? But I spent quite a lot of time on AI at the weekend, just trying to work through this stuff, because we know that tech is one of the biggest growth industries, in the UK and in the world, actually. So where these businesses are locating is actually really interesting to me. And so what I did was, and obviously this is where there is a really good use for AI because they can short circuit the amount of time it takes to do this stuff, is putting that information into AI and then basically asking for groupings. Are there any obvious groupings of locations where these tech companies are located? And then what I did on top of that was say, okay, fine. So what about, so these are the emerging tech companies, but what about some of the biggest tech companies? Are they in the same locations? And so the AI cross-referenced that with the emerging tech companies. And sure enough, there were some new locations that came as part of that, but also it kind of reinforced the locations. So there's certain areas in London, so certain areas in some of the bigger cities where some of these concentrations of these businesses are. And then I got to thinking about okay, so what else is going to be interesting for this? Okay, so are there any other major businesses in those locations? What about life sciences? That's a big growth sector. Let's do the same exercise for them. Let's look at those. And then why don't we overlay kind of infrastructure and housing growth as well and see kind of where the cross reference is. The really interesting thing about doing exercises like that is that you can actually then look at emerging locations, because sometimes by the time some of these locations are established, certainly for tech and life science, some of them, the more expensive end of the spectrum, sometimes it's a little bit too late as an SME investor to get into those markets because they're pretty expensive. But what about the emerging markets? And when I did my cross-reference exercise off the back of that, I found actually there was areas not that far away from some of these hubs where actually, because of space restrictions and lack of availability, some of this spend and some of these tech hubs are actually moving out to some neighbouring locations, bringing spend into those locations. And of course, when you've got something like tech, when you've got something like life science, what you're actually got is a concentration of skilled workforce. So you've got, tech workers in tech who have got a very strong specialism in one subject. Same for life sciences. So ergo, you've probably got people earning slightly, quite a lot higher than average. And therefore, what's the knock-on impact for retail? What's the knock-on impact for leisure in those locations? What about house prices? And so before you kind of know it, you're going down kind of many, many rabbit holes in terms of really trying to understand some of these emerging locations. And of course, we always have to kind of take what AI says with a bit of a pinch of salt. But overlaying on top of other property knowledge, we can really start to see some trends emerging. We can start to see where some of the potential hotspots are. And of course, there's a lot of due due diligence you need to do on top of that, which is going out and looking at locations, which is doing viewing, speaking to agents, looking at the portals. You need to do a whole layer on top of that. You don't just rely on kind of joining the dots and then stopping there and just buying property without thinking about it, because obviously supply and demand is really, really important in buying real estate, especially commercial real estate. And so we want to make sure that we're making absolutely the right decisions by doing the right due diligence. But just by spotting what's happening in the news and joining the dots, looking locally, you can really start to see some of this stuff coming through. And the same is true of trends. Like, I really do have a kind of radar for spotting trends as well, because in commercial property, it's really important. There are winners and there are losers. And, when I started out in commercial real estate over 30 years ago, which is slightly depressing, you could basically invest in any type of commercial and it was going to do well, and you would get a 25-year lease on full repairing and insuring terms. But now it's very different. Every sector, every subsector, every micro niche is doing slightly differently, because every business is doing slightly differently, and there's winners and there's losers, and there's people in the middle. And so what we want to do, obviously, is as investors, we want to be backing the winners. We want to be securing properties where there's going to be demand for the foreseeable future, where there's going to be lots of tenants wanting to locate in that particular property, which means you're going to get rental growth, which means you're going to get longer leases. All of this stuff is really, really important. So this is why kind of having these kind of radars, this reticular activating system, can be really, really helpful. And so, for example, when I'm listening to the budget, when Rachel Reeves is talking, and she's talking, it's not just about the taxes. Obviously, we're listening to that and we're understanding that and how that will impact our lives and our businesses. But we're also thinking about where investment's going. Now, obviously, you have to take some of that with a bit of pinch of salt until it actually happens. But kind of where is investment going? Where are they relaxing planning restrictions? Where are there going to be more housing numbers? Where's regeneration happening? All that kind of stuff is super, super important. And when you start getting in this headspace, this commercial property headspace, where you're really starting to look out for these trends, these patterns, you really start to kind of hear things in the strangest places. I can go out with a group of friends and they're talking about something happening, and I can start putting two and two together in terms of the commercial property angle. So this is really about looking at as much property as you possibly can, of keeping your eyes and ears open, but also looking at things with a different pair of spectacles, looking at the news with a different pair of spectacles, reading the local newspaper with a different pair of spectacles, and certainly looking at property with a different pair of spectacles. And, once you see this stuff, you genuinely can't unsee it. You will be slightly overwhelmed with all the niches. So when I first start working with people, they're like, oh my goodness, I don't know how to niche. And then once they understand this stuff, like literally you see niches everywhere. And actually your problem is how to refine your niche well enough, because you could be doing 20, 30 niches. It's about understanding what's right for you, what's right for your kind of part of your investing journey where you are right now, what's important for your lifestyle, or whatever else is important. What's important for cash flow. Or do you want cash flow? Do you want profit? Do you want equity? Whatever it might be. And then you can kind of refine and pick and choose. But the importance is that we have this long list of opportunities that we're spotting. And then we can refine our 1, 2, 3 niches off that. But we've got maximum amount of information available to us. So, I don't necessarily subscribe to reading all the depressing news in the news, because, there's a lot of fear mongering that happens. But read between the headlines. Pick and choose what you're reading. Look at the business, the economics section, the money section. Really start to understand kind of how you can take a headline that might not seem relevant to you, but actually apply it to your property journey. And before you know it, you will have more niches than you know what to do with. And of course, the skill then is to really start to understand what's important to you so that you can refine those niches and really pick the very, very best ones. So happy news reading, happy visiting towns, because genuinely it's an absolute game changer in terms of working out what you want to invest in. So thanks for listening today. I hope that's really useful, and I really hope that you start looking at news in a totally different way. And I look forward to seeing you next time on the Commercial Property Podcast.